Hello everyone, this is Marvin from stockmarketplan.com with the stock market watch for today is Thursday, August 4th, 2011. In front of you see the S&P 500. We had a rough day today in the markets. But you know, if you've been watching the videos I've been posting up on the internet and Facebook, and it shouldn't come as any surprise really. We've had numerous distribution days along the way, especially in the last 7 sessions. It's been a real rough ride for people who are long stock, people who own stock. It's last video I did was in early June, and basically at that juncture I kept saying that there is signs of the market stalling. And if you look at the screen here, I'm going way back. I mean, I believe it was like June 9th, right in here when I did my last cast. Somewhere in here, but basically it doesn't matter when it was, what day, 3 or 4 days, who cares. Looking back now in hindsight, what, 10-12% off the highs. And basically what I reiterated there is that the volume patterns, and I've been actually talking about that since I started the blog, about just seeing higher volume down days, okay, right here on the screen, and also you know, the lower volume up days, the green bars, okay. And you just look, it's overwhelming. It is overwhelming, the difference here and the distribution in the marketplace. When the market goes down and has a down day, it's just you know, goes down with 2 hands. When it goes up, it doesn't. It goes you know, there's not that much accumulation on the bounces. So today here we are, you know, everybody's panicking now. Well, again, like I said, I've been in mostly cash. 75% has been in cash from way back in June. Hopefully you know, you've been listening and just trying to learn exactly how to read markets, and you know, we've called this one to a T here, and you know, I just wanted to come out and look at today's session. Again, highest volume that I can of the year probably. If I go back here and I'm looking at the spiders, yeah, I mean probably beyond that, way beyond that if we look back some more. Yeah, I can't remember the last time we had volume like this. So it is major. Of course, you've got guys out there now saying, oh, this is a great time to be buying stock. Well, I'm sure they said the same thing here, and now here. So, you know, best thing to do, guys, is it's always been good for me to just let the market trade out of this level. Now it's a brand new level. The market hasn't been here in how long? Let's see. Okay, back in December of last year. The market has to prove itself now at this level. Okay, it's not just going to happen overnight. Okay, it's going to set itself up. It's going to build a base. You've heard me mention bases here over and over again. So it's going to build its base, and then it's going to either crack up or crack back down. So you know, it's I'm going to show you the resistance that I see now. Of course, the 200-day right there. Okay, that purple line. Okay, 200-day moving average. Also the 50-day and also the 20-day. So these are all levels now that the market has to contend with. Okay, has to on the way up. You know, if you were a holder here and you held it all the way down, you know, the last line should have been here. Once you had a close underneath the 200-day, which is back on 2nd of August, should have been, you know, sayonara, see you later. At least some of your position, maybe not all of it, but reduce your exposure. So here, you know, here we are way down here now. Okay, so now we're looking for a day for the market to bounce. Okay, and again, I keep saying and reiterating, when it bounces, how is it going to bounce? Okay, is it going to bounce like this? Look at this distribution day right here where we met the 200-day moving average. More than likely way back here I was talking about this coming, once it broke down through these levels, coming down and meeting the 200, and certainly did, and then it popped back up. Okay, but when it popped back up, look at the declining volume, and there's no action there. So, you know, now we're at the same thing, repeats itself all over again. Okay, we're way down here. Now let's see what kind of pattern we build before I'm going to see what kind of pattern the market builds before I move into any type of stock. Okay, I'm basically all in cash right now. I was basically I was mostly in cash from way back in June. I only held 25% of my assets in stock. So you know, surprisingly, you know, people have been knocking on the dollar a lot. You know, the dollar, you know, just knocking it and saying that the dollar, you know, is being devalued, and this is true. You know, when we look at the value, the overall value with inflation, what it costs to buy things nowadays. But I mean, boy oh boy, you know, the dollar is still the king of safety. You know, even gold today had a down day, and so did silver. So, you know, people still love the dollar. You know, when things, you know, when they say everything hits the fan, you know, the dollar's still king. I mean, people still rush to the dollar. Okay, so don't want to drag this on. Again, looking for a bounce now into these levels, and we'll see how it goes. Am I a buyer down here? Heavens no, heck no. That's like catching. This is when you hear the market catching a fallen knife. That's what this is, fallen knife. Go ahead and try it. That's Vegas. That's just rolling the dice. You know, hopefully, you know, stick something and get 5, 10, 6% with all that risk behind it. It's not worth it. So, you know, let's see how it bounces. Let's see how it bases out. You know, we might see 4, 5, 8% more after this move. So if you're still holding stock, you know, good luck to you. It's a rough ride. Now, you know, I always mention when a stock goes from $10 to $5, that's a 50% drop. And you say, a lot of people say, well, I'm going to hold on to it, it'll come back. Well, now you need 100% move just to break even. That's why it just doesn't pay to hold things down this far down. It just does not. That buy and hold, I mean, with some things it works. If you have time, especially if you're older in retirement, it doesn't make any sense to do that. You know, just be very, very careful. Again, we've been mostly in cash here. If you've been watching the videos since back in way before June, I mean, I think the highest equity position we've had in the last 3 months is 50% of assets, and lowest 25%, and now all in cash. So don't want to bore you with this anymore. You're gonna have a lot of people with their excuses. You know, this is because of this, or this is because of that. Guys, this is because of sellers. There were more sellers than buyers. Who cares why it was? Okay, it's gonna be. Don't be those guys that get caught up in all the hoopla of, you know, why is it up, why is it down. It's great for cocktail parties, but you know what? The bottom line is that we're down 10, 12%. We're actually down for the year now. Okay, here's our January right here. Okay, we're down. Here's where we closed today. So, you know, concentrate more. I would advise to, you know, people that I teach this stuff, you know, to concentrate more on stock price action first, and then everything else will fall in line. Anyways, this is Marvin from Stock Market Plan. I encourage you to subscribe to the channel, visit the blog, subscribe there. You can get all these feeds for free. I do this out of just the passion that I have for the markets, and boy, we've really called it well here. So, you know, hopefully you've been watching. Okay, guys, have a great one. This is Marvin with StockMarketPlan.com. Again, Twitter is Stock Market Plan, and Facebook Stock Market Plan. Have a great one, guys. Bye bye.